Welcome back to Trading 360. Time for the disruptors. George Tsilis is here with today's company, Autoliv. George, what is it that's jumping out to you about this company today?
Well, I think there's been a lot of focus, like your previous guest from CFIRA, about the auto manufacturers, but behind the scenes, there's some companies that are actually performing quite well within the auto parts space. If you look at Autoliv, which is essentially a Swedish auto manufacturer, they're a global supplier of auto parts that are focused primarily on safety technologies, everything from the standpoint of seatbelts and seatbelt tensioners, things like, of course, airbags, which include front and side airbag protection, but all of the collision mitigation sensing technology that communicates with those safety features of vehicles are also what Autoliv supplies the global marketplace. So effectively, it's an auto parts supplier. And if you look in the last year or so, it's actually performed quite well. It's up about 26%, where if you look at Ford and GM, where a lot of the focus is, especially in the United States, on the UAW strikes, those two stocks are down sequentially. But if you look at Autoliv, it's not necessarily exposure to the U.S. auto markets that it has to deal with. If you look at its global presence, it has exposure in multiple continents. In fact, if you look at their breakdown of sales, Nissan, Renault, which is basically a large global manufacturer, is about 14% of their sales, where Honda and Volkswagen, both of those companies represent over 10% of Autoliv sales. So it's a company that's not necessarily exposed too much to what's happening with the UAW strikes and the U.S.-based auto workers strike. But at the same time, this is a company that's still profitable on an annualized basis and expected to grow its earnings about 15%. Now, aside from that, if you look at the global workforce for Autoliv, it's about 64,000. And about 2 quarters ago, this is back in June, they did announce some restructuring of their business units, which included some layoffs. So they re-announced today an additional 300 workers, both direct and indirect workers, that are going to affect, of course, markets in Japan, the Netherlands, and some of the United States, unfortunately. But if you look at the total 1,100 workforce reduction that they announced in June, it really represents only about 2% of their workforce. So the point is, I think if you're looking for a way to play the aspects of the auto markets without the direct exposure to the U.S. manufacturers, is certainly one way to do so. And the other thing is, it's not necessarily new cars that Autoliv has exposure to. Anytime there's a collision, in fact, seatbelt tensioner technologies and also airbag sensors need to be replaced, and that's mandated by insurance companies. So not only is this technology mandated in new cars, but even the replacement rate for collision-based vehicles is also where there's a more consistent, non-cyclical demand for Autoliv's technologies.
All right, so what would be your example trade when you look at that competitive landscape there? What's the example trade for today?
Well, I look at the stock. It doesn't trade much volume. And in fact, if you look at the way it's been trading, it's been in a steady uptrend, but there has been some cyclical pullbacks within this uptrend since October. So with that said, I don't expect the stock to move too much. And so with that in mind, we can not necessarily put on an aggressively bullish trade, but we can still stay bullish nonetheless, mildly bullish by putting on a put vertical or selling a put vertical. And so in other words, we're going to go out to the November expirations with 43 days to expiration, sell the 90 put, and simultaneously buy the 85 put. Now, that short strike of 90 is obviously below the current price by about $2.50. But altogether, this is sold for a credit of $1.25 per share, $125 a contract. So ideally speaking, the whole objective here is to sell high and have the option premium erode to zero between now and expiration. And that'll happen assuming the stock stays above $90 between now and expiration.
All right, George Tsilis, thank you for that. All about Autoliv. We really appreciate it. ALV, our disruptor today. George Tsilis, thank you every day.